Ladies and gentlemen, good day and welcome to the Srivari Spices and Foods Limited H1 FY26 earnings conference call hosted by Equibridge Advisors Private Limited. As a reminder, all the participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Ruchika Shah from Equibridge Advisors Private Limited. Thank you, and over to you, ma'am.
Thank you, and a very good afternoon to everyone. Welcome to the H1 FY26 earnings call of Srivari Spices and Foods Limited. From the management team, we have with us today Mr. Narayan Das, Whole-time Director, and Ms. Sushma Bala, Company Secretary and Compliance Officer. Before we begin, I would like to mention a brief disclaimer. This conference call may include certain forward-looking statements which are based on the current views and expectations of the company. A detailed disclaimer is available in the investor presentation that has been uploaded to the stock exchange. With that, I now hand over the call to Ms. Sushma Bala for her opening remarks. Please go ahead, ma'am.
Thank you, Ruchika. Good afternoon, one and all. On behalf of Srivari Spices and Foods Limited, I welcome all the participants to this earnings conference call to discuss our financial performance for H1 FY26. The financial results have been filed with the exchange and are also available on the website, company's website. Before we move into the performance highlights, I would like to begin with a brief overview of Srivari. We founded in 2019 in Hyderabad. We have grown into a strong FMCG player with over 88 SKUs across atta, spices, masalas, and edible oil. We source our raw materials from key agricultural regions across India, process them in advanced, fully automatic soil grinding units, supported by world-class zero-contact packaging systems. Our core markets continue to be Andhra Pradesh and Telangana, where we are present through more than 18,000 retail outlets, and our recent placement across 40 KTM stores has further strengthened our modern trade footprint. Our distribution side, our channel strategy is diversified across both B2B and B2C. We cater to HoReCa, institutional clients, general trade, and B2B e-commerce, while our B2C presence is driven through our dealer network and modern trade partners. During the period, we expanded our visibility with product onboarding on DMart's online platform throughout Hyderabad and Big Basket throughout Telangana and Andhra Pradesh, along with increased shelf presence in 29 Ushodhya supermarket stores and 13 premium Balaji Grand Bazaar outlets, along with Vijay and Q-Mart stores throughout Telangana. We are also pleased to share that the company was honored with the Excellence in FMCG Spices Brand Award at ET Excellence Awards 2025 in Telangana. Additionally, our Srivari Spices portfolio was featured in Forbes India in August 2025 edition, among several other recognitions that reflect the brand's growing credibility. Looking ahead, we are planning to introduce a new business vertical focused on manufacturing, trading, and distribution of puja articles, devotional goods, festival-related items, and allied products. This planned expansion is aligned with our strategy to diversify into adjacent consumer categories with strong demand potential. Coming to financial performance for the first half of FY26, we delivered a robust set of results. Revenues stood at 78.77 crores, EBITDA at 13.43 crores, and PAT at 7.20 crores. Our profitability remained healthy, with EBITDA margin of 17.05% and PAT margin of 9.14%. On a YOY basis, revenue grew by 49.08%, while PAT increased by 46.66% compared to H1 FY25. Overall, we remain focused on strengthening our brand, expanding our distribution, driving operational efficiencies, and creating sustainable long-term value for all our stakeholders. Thank you for your trust and continued support. We remain focused on operational efficiency and working capital management and strengthening our market presence. The demand environment continues to be encouraging, and we are confident of our sustaining the growth momentum in the second half. With this, we open the floor for questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register for a question, please press star and then one. Our first question comes from the line of Shubhanu from Three Head Capital. Please go ahead.
Hello, hope I'm audible. Thank you, ma'am. Thank you for the opportunity. Sir, can you give segment-wise revenue breakup this quarter, H1? Hello, can you hear me?
Yes, sir.
Yeah,
Can you tell me?
then you need the breakup for segment-wise revenue.
Yes.
We have a single segment we have. I mean, like product-wise, you are checking?
Yes.
No.
How much percentage of revenue come from spices and much atta and how much oil? Hello.
Yeah, 1 second.
Okay.
Sushma, are you able to access this question?
No, sir.
So it's okay. I'll take this call actually. Okay. Yeah, revenue-wise breakup, if you see here, we have did 45% with the atta and 40% with the spices. Spices is including blended spices and both, and 5% is with the oil actually. This is the revenue breakup.
40% from spices and masala.
Yeah, 45%.
Sorry, 45% from atta, 40% from spices and masala, and 5% from oil.
Yeah, exactly.
Okay. Sir, in our earlier call, 100% revenue growth for FY26, are you sticking on this guidance?
See, we cannot comment as of now, but we'll definitely try to meet that.
Okay. That means H2 will be better than H1. Hello.
Yeah.
Am I right? That means H2 will be better than H1?
Exactly, I didn't get you.
If we stick on the guidance, the H2 will be better than H1.
Yes, definitely. Yes, that is true. H2 will be better.
And in terms of margin?
Well, oil was launched recently, so it will take some time we need some time for this to pick up this revenues from the oil. So the H2 will be better in the oil. So that will be pick up this very well. So H2 will be better than H1.
Okay. Sir, can you tell me a bit more about our e-commerce initiative on Postpeak?
No. Caustic is already not a part of Srivari. Now we have, so Sushma,
We have
did this.
already. Yes, sir, I'm telling.
Ah.
Regarding power stick, as we have already informed, and even in the AGM also it was discussed, we have totally told Srivari supply chain, it is no more connected to Srivari, the supply chain and the power stick. It is belongs to supply chain, and that company is no longer a wholly owned subsidiary company. It is not connected to Srivari anymore.
Okay.
Yeah.
Sorry, I missed that.
Yes.
Okay. Thank you, and best of luck, ma'am.
Thank you so much.
Thank you. Our next question comes from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, am I audible?
Yes.
Yeah, firstly on the revenue split, so you said 40% from spices, 45% from atta, and 5% from oil. Is that correct?
Yes. 45%
आपण
from
ज्या
atta.
व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्डवर ठेवला आहे.
Hello?
Yeah, sorry. Yeah, go ahead.
Yeah, it is 45 from atta, 40 from spices, and 5 from oil. Correct.
But that doesn't add up to 100%. That adds up to only 90%.
No, actually that was mistaken. We have actual data here in tons. So I have estimated that. So actually major share is atta actually. So you can take it
Okay.
consider it as a 50% is atta, 45% is from spices, and 5% is from oil.
Okay.
Because we have
And,
the data in tons, metric tons actually.
Okay. And so the 72 tons that we've utilized from oil.
No, actually that is
that
not
is-
72. Actually 720 tons actually. That is by mistaken. It's a 10% we
That was a
utilize
mistake.
the
Okay.
oil.
Okay. So that was
So that is by
720. So
mistake.
10%
It's a clerical
utilization.
mistake. Yeah.
Okay. Okay. Now, if this is possible, could you give the margin for spices, atta, and oil, and do we have better margins in oil? Is that how we can look at it?
So as of now, the margin is not better in the oil because it is in the launch phase. But definitely in the next quarter, we'll pick up the margin in the oil also.
So what sort of margins do we have on spices and atta right now, separately?
Sushma, update karna.
Sorry, I missed it. Can you please repeat?
Yeah, the margins in spices and the margins in atta, and what sort of margins are we expecting from oil to happen in a year, probably in FY27?
I'm so sorry. I mean, we cannot exactly tell any. Yeah, please do not expect.
But with the contribution from oil increasing from 5% maybe next year to 10%, do we expect our margins to expand?
No, because it is in the it is an initial stage now, this oil. So initially we might not get more margins. So once we cater into the market and once people understand about the quality and all, like soon the margins will be better. But initially it will be like minimal only. Not
So
much.
currently we are EBITDA break-even, or are we loss-making on the EBITDA level as well in the oil division?
I'm sorry, your voice was disturbing a bit.
Yeah, is this audible now?
Yeah, now it is clear.
Yeah, so the oil division is currently EBITDA break-even, or are we loss-making at the EBITDA level?
So that you can only answer.
Sir, what is the question exactly? Can you repeat? Sushma?
Yeah, the oil division, is it currently EBITDA break-even, or are we still making losses on that right now?
No. It's in break-even only, not in the losses.
Not in the losses. Okay.
Not in the losses.
And it will get PAT positive from FY27, is that correct?
Yes, definitely.
Okay. And now we are also launching soya chunks.
Yes.
So what
Now
sort of
already
timeline
launched
do
this.
we have for that? Okay, we already launched. Yeah.
It's launched, yeah.
And what sort of capacity do we have there?
No. As of now, we didn't go for this plant actually. We are repacking it. After once we get this standard sales, we'll go for the plant. We install the capacities later on after 2 quarters.
After 2. So maybe FY27 you're planning for a plan.
Yes.
Any
We are
sort of
planning for
capex
that.
you have that you've planned for that?
Yeah.
So could you give a quantity of the amount of capex you are going to spend on the soya chunk?
No, that is as of now not yet decided about that. So we are into the we are testing actually. We are in the testing mode for the soya chunks. So once after the 2 quarters only we can go for the capacities and what will be the capacity required.
Okay. And this new brand that we are launching for these puja and devotional goods, those are also going to be trading, or are we going to manufacture them?
No. Some of the products will be manufactured and 70% of the product will be sourced from the outsource only. We will be only repacked.
Okay. And these will be sold through the same e-commerce division or also B2C?
It's a B2B. It will be more 90% will be B2B only.
90%. And when are we launching that brand?
Yeah? Yes.
When are we launching?
In Jan. Roughly in the Jan we are going to launch.
So we will update on NRC as once everything is set up and before launching. Soon we'll upload in NRC.
Okay, so mostly the new things are right now in the ramp up phase. So maybe FY28, what sort of splits do you see from oil and soya chunks happening, and how will the product mix look? Because as we go forward, the contribution from oil and soya chunks will keep increasing. So could you give an idea by FY28 or FY29 what sort of contribution from each of these verticals would be there? So,
hello?
Yeah, sure.
No, she's asking how much this soya chunks and this puja products, how much are they going to cost?
We are into the launch phase of soya chunks and we are about to launch, so we can't comment as of now on that. We are into the experimental mode on both the products. So we are not putting any heavy capex in that. With the very low capex, we are planning it only with the packaging material, so that there will not be any hit which is so the products are very we are optimistic about that these both the products, very much optimistic. And if you see the current market, the market is a huge market potential. So we are that is into the experimental mode, so we can't comment as of now with the what will be the capacities and utilization or how much is the revenue part.
Okay. Are you also spending on marketing and branding? What sort of spends do we have per year on that?
Yeah, we are spending on actually we are already live our ads on the TV channels, the TV, the local TV, NTV and Bhakti TV. 3 to 4 channels we are already live on the advertisement part now. From last 2 months we are doing on the advertisement on the channels actually, on the regional channels mostly. We are focusing on the regional channels.
Okay, and what sort of, what is the amount of spending that we're doing?
Come again, actually, if I didn't get it, some clarity is not in the call. What will be the
expenditure, she's talking.
So all together monthly we are spending 5 to 6 lakhs on the this media channels, new media channels.
Monthly, that's on the monthly basis?
Yeah. So overall yearly we'll plan our revenues we are targeting with 1% only, not even 1%, below 1% it will be.
Okay. Yeah, I think that is it. Any other products are we looking at launching in the next year?
Yeah, we are into the planning with a lot of the products, but as of now we are into the R&D mode only. So so we have to after 2 quarters only, not in the now the next puja products will be launched. After that we will plan in FY27 only, 27, 28 only.
Mm-hmm. Okay, and are we still sticking to the guidance of 100% growth this year?
No. Not, we are optimistic about this now revenue as well, but due to some delays, so we can't check exactly the numbers. But the growth will be maintained as the past growth will be maintained better than that. What we did in the past 3 years, that will be better than in percentage wise. You will find everything better. EBITDA as well as PAT and revenue all will be better than in percentage.
So we can maintain this 17% EBITDA going forward.
Yes.
Okay. And for FY27, what sort of growth are we targeting?
Growth will be, as I said, there we will maintain better growth. As I said, new products are launched, so might be 100% will achieve. Exactly, I can't comment on that.
Okay.
But it will be better, more better than the FY27 will be the best in our past complete history.
Okay. Yeah, that is it from my side. Thank you.
Thank you.
Thank you. Our next question comes from the line of Resha Mehta from GreenEdge Wealth. Please go ahead.
Yeah, hi, thank you. I just wanted to understand, what is the rationale or the logic, to get into, puja and devotional products? Are there any synergies maybe on the back end or the front end that we see with our existing atta or spices products?
Yeah, exactly. This product is actually 95% market is unorganized. So we have a very good potential and growth and margins in that. So no other brand in India is focusing fully on this. Only some agarbatti brands are there, Cycle and Mysore Sandal, and you can count on our fingers actually. Only that much of brand that will be only focusing on the agarbatti. Apart from the other products are not even in the organized segment. So we are trying to get into the organized segment as well as the purity also. 90% of the purity is lacking in that segment. So we have seen that. So we are trying to get
which specific products are we looking at in this?
For example, kumkum, if you go for the kumkum and puja oil and turmeric is there, and many agarbatti is there. Everything will be there. Every puja product will be there in that segment. Almost 30 line items will be there in that segment actually.
But what is the synergy that we are seeing with our existing spices and atta business? So on the back end,
the connectivity is the main is there. We have a strong hold on the general trade, and the same product will be placed on the same segment. So that will become our strength. So our portfolio will be way better, and it will be easy to get the revenue in that segment. No other players are working on this segment as a fully and complete with the range.
And we are getting into too many new products, right? So this is one segment.
When we started the company.
Sorry. Just if you can allow me to complete my question. Okay. So the other is, we are hardly 100 crore revenue, right, in spices and atta. So why is the need to get into so many new product segments? Because the market size, I believe, for spices and atta is only so big that if we focus there and if we could make some serious dent there. We are very, very small. So with so many new launches, is there a chance to kind of get distracted? So that's the broader question actually.
Yeah. You're right actually. As you said, the segment are huge, spices as well as atta. But geographical expansion is not that much easy. Because when we go for the placement of the new product in a new region, it will be quite tough. It will take at least a year to get the proper placement also. So it will dent our profitability as well as the network also, to build a network. So rather than doing that, we have decided to go with the portfolio which is having existing stores, same market, same distributors. So it will be very much easy, and the timeline will be very short. We can place our product within the quarter. So that is our idea, to get into the multiple products rather than expanding more speed on this geographical. Even we are expanding the geographical also, but as we launched in the Maharashtra, so we are having a very tough time in the Maharashtra. So we are not getting that much of revenue speed what we wanted, because brands are already acquired from last 25, 30, 40 years. So it will take a lot of time for the placement also. And second thing is we have to put a lot of budget on the advertisement if you go for the new state, to get the consumers attraction and to consumers that confidence on that product, actually new product. So rather than that, we are trying to expand our portfolio. That will be easy. And with this portfolio, if we go for the expansion of it will be easy for us. So any of our product will get at least in the market actually, so placed in the market easily. And we are looking this Puja product as is for the placement, as a placement will get very good and easiest placement in any regions.
But, the more the new products we launch, would that eventually be margin dilutive, or do we still think that whatever new products we launch, overall at a company level, we should be broadly comfortable to maintain that 16-17% EBITDA margin?
Yeah, true. Actually, so if you go for the a selection of a segment, all are high margin segments. We are not going into the competitive market or low margin products. So that is our USP to maintain this EBITDA. We can maintain easily EBITDA. And in the Puja products also, we are not installing any capacities or we are not putting more capex on that. Initially, we are doing with the third party packaging. In-house packaging with loose will procure and even we have launched the Surya Chunks. We are procuring loose and we are repacking it as of now. We didn't go for the installation of the manufacturing unit. So initially once we get the right numbers, then we'll go for the installation of we'll put the capex on that.
Got it. And so all the new products, basically what we are saying is that once we go outside our home state, since it's going to be competitive and very hard to increase market share in new states and it will be expensive. So hence we'll keep launching more and more new products, new categories in our home states only of AP and Telangana. Is this understanding right?
Right.
Got it. All right.
The brand is already well known to our region now. So we'll take that benefit actually. That will be easy for us for the placements.
Got it. Thank you so much.
Thank you. A reminder to all the participants, if you wish to register for a question, please press star and then 1. Our next question comes from the line of Tanmay Bhatt from an individual investor. Please go ahead.
Hello, am I audible?
Yeah, it's audible.
What are the key strategic priorities for FY26 and 27 to strengthen your presence in Andhra Pradesh and Telangana? Hello.
So, hello. Narayan sir.
Hello. Yeah, it's not audible. What's the question actually, Sushma?
What are the key strategic priorities for FY26 and FY27 to strengthen your presence in Andhra Pradesh and Telangana?
So we are putting budgets on the advertisement on TV channels actually as of now to strengthen our brand and awareness, create an awareness of the brand and to update the market with the new products also. So we are focusing on 3 to 4 channels as of now, and we will be expanding. We'll be putting more budget on the advertisement.
Okay. And how do you plan to expand distribution beyond 18,000 retail stores and 40 KPN stores?
Mm-hmm. So that is completely in the Andhra Telangana. The deeper market penetration we are doing as we have already in-house vehicles also for that. So we are doing with the small store acquisition of small stores, and we are having a distributor network in complete Andhra and Telangana. We are focusing on more on the GT only, general trade only.
Okay. And are you adopting tech-led distribution management systems for these retail stores?
Yes.
Okay. And one more thing, how is the company planning to scale the new vertical that Nia Narayan for puja and devotional products? How large is this market and what are you targeting? And I just want to understand one more thing, will this operate as a separate division?
No, will be the same division, and it's a huge potential market. As no other companies are focusing on this segment. We will be the first comer in that. So that will be added benefit for us. So only agarbatti products are there. Some of the agarbatti brands are there big. They are doing very well only in agarbatti. So but we are coming out with a complete portfolio of puja products. So as of now, we didn't plan targeted any revenue guidance on that. But we will be placing on the same store, general trade stores. It will be easy for us to target the market easily in Andhra and Telangana. Initially, we'll focus on these two states only on this with our existing network.
Okay. And in H1 FY26, the short-term borrowings increased. Can you explain what were the components contributed to this?
Actually, mainly there was one OD came on the last day of September, so that contributed so much towards short-term borrowings. That was one of the main reasons.
Okay.
Yeah.
Are there any current plans for raising equity or debt for expansion?
No, like whatever
No, as of now, but we will be going for the debt as of now.
Yeah.
If we need it exactly, we'll go for the debt from the bankers.
Yeah.
Okay. And how do you plan to economically scale the oils category given current low utilization?
Exactly for the oil you're talking?
Yes.
Yeah. Can you come again? Yeah. That question.
So you are able to answer, Mr. Shah?
No. Can you come again, that question? I didn't get you.
Hello.
Oh, yes.
Can I repeat?
Yes, please.
Okay. How do you plan to economically scale the oil category given the current low utilization?
Now, as of now, we are into the launch phase there, and the product will be soon placed on all the e-commerce platform. We are trying to get some exclusive deals with the Big Basket and Amazon. We are into the talks with them. The exclusive launch throughout the India in that product on the e-commerce platform. So that will make an added revenue part. And Big Basket, we are about to finalize on the Big Basket also. The exclusive launch actually. For 3 months, we are giving only to this Big Basket. For this cold press actually. Both the cold press we are launching with that. Normal will be launched in the general trade as well as. And all the modern trade. We are focusing on the modern trade in this for the groundnut trade.
Okay. And this Srivari has 88 plus SKUs. Okay. So how do you decide which SKUs to scale or rationalize?
Exactly. I didn't get your question, madam. Rishma?
I think you're asking, we have 88 plus SKUs, no, sir. So which one gives us more revenue? Especially it is 1 kg or 5 kg. Which one gives us the more?
No. I said it's not revenue.
Is it that too?
No, SKU wise we'll maintain, for example, chili. Chili having around 6 SKUs so for 50 gram, 100 gram, 200 gram, 500 gram, and 10 rupees, 5 rupees. So we have to maintain the complete basket because we are serving mostly on the general trade. So revenue wise, for lower value products will not be high revenue, but due to the awareness and availability we need to target each and every consumer for the C class or D class, A to C, D class also. So we have to maintain all this in our portfolio. So most of the revenue will get from the higher this SKUs only, 500 grams and 100 grams, 100, 200 or 500 only. But we have to maintain all the SKUs to get all the markets to target and to get the market share. We have to
awareness. Okay. Is that the question you asked?
Okay. And one more question. What percentage of revenue comes from modern trade, general trade, and e-commerce trade? Can you give that bifurcation?
90% will be e-commerce and modern trade. 10% will be. Now around all together with e-commerce and 12 to 15% now. Earlier we are doing 10%, now 12 to 15% in between. Around exactly we didn't check the rest. 85% of the part is from general trade only.
Okay. And which new states are planned for expansion outside the southern market?
Despite the southern side, we have a lot of plans, but we are more focusing on the new portfolio rather than expanding the geographically. Because it's a cost effective. If you go for the expansion, but we are into the pipeline with the Karnataka, Ahmedabad, Gujarat, Karnataka, and This Odisha. We are into the plans to for the expansion.
Okay. And do you see like export markets like Middle East or Singapore, US as an expansion area?
Yeah, definitely. But in FY27, next year we'll plan for the this. Next year we are into the planning for that.
Okay. Or have you initiated regarding the same or in FY27?
27.
Okay. And okay. And last one question. Like, are there any plans like to strengthen the B2B business under the partnership with SOLV? Like, can you
see,
the
Solve we are not. Yes, sir. So Solve is not doing that much great, but Jumbotail, I think Jumbotail already acquired the Solve also parallelly.
Okay.
So we are doing strengthening. Almost we are serving around 3,000 stores with the Jumbotail itself as of now.
Okay. Okay. Great. Thanks a lot and all the best.
Thank you.
Thank you. Thank you so much.
Thank you. Participants, you may press star and then 1 to ask a question. If you wish to register for a question, please press star and then 1. Our next follow-up question comes from the line of Shubhanu from 38 Capital. Please go ahead.
Hello. Thank you for opportunity. So can you tell me currently how much revenue come from B2B as an H1 FY26?
B2B. Hello.
Yes, sir. B2B is asking.
Yes.
95, more than 95% of our is with B2B only, sir.
Sorry, can you repeat?
95% of our sales is from B2B only. B2B in the
95.
modern trade. See, modern trade is different with the superstores, and e-commerce is different, and general trade. These are the three trades, and fourth is B2C, direct to consumer. So direct to consumer is all the three segments are in the B2B under segment.
Sir, I don't understand that 95% of the revenue come from B2B.
B2B only. B2B means general trade, modern trade, as well as e-commerce platforms.
Okay. Currently, the e-com contribute around 12 to 15%.
I'll give you exactly 15% of the revenue we are doing from modern trade and e-commerce platforms, and 85% we are doing from the general trade.
Okay. My second question is, if our brand is good and our product is good, why we are hesitating to entering any new market? Because if we enter any new product, इसमें भी तो margin dilution हो रहा है ना? Like oil में हमारा margin dilution हो रहा है, but if we enter any new product, उसमें भी थोड़ा सा margin dilution होगा. But हमारा enter करने के लिए इतना hesitation क्यों हो रहा है?
Okay. See, I'll tell you one thing. I'll clarify on this. See, margin dilution will be initially in the first quarter only, not after that. So for the placement, we have to dilute some of the margins. But after a quarter, definitely it will pick up and we'll maintain the margins. As we have already in the place, we have done the placement, very good placement with the oil. So now in the H2, we'll get very good revenue with the good margins.
Okay. Can you tell me your Atta segment SKU mix? Currently, how much percentage of the revenue come from like 500 gram, 1 kg, and what is the pricing?
No, exactly 5 kgs and 10 kgs. We are running 1 kg, 5 kg, 10 kg, and even 30 kg also. So most of the product are 90% we are selling consumer 5, 10, and 1 only. 30 kg is very less on that.
What is the 1 kg pricing? Sorry?
Around 47 rupees.
47 rupees.
Yeah.
Okay.
That is for B2B actually. That is not for the consumer.
Yes,
B2B price that is.
Yes. Yes, sir. Okay. Thank you, sir. Thank you. Best of luck.
Thank you. Our next question comes from the line of Jayesh, an investor. Please go ahead.
Yes, good afternoon, everyone. Am I audible?
Yes, audible.
Yeah, thank you. So my first question is that what are the key drivers? 49% year-on-year revenue growth. in H1 FY26, and how sustainable is this momentum over the next 4 to 6 quarters?
See, main our revenue driver is and we can maintain is only quality. So the kind of quality we are maintaining, once the placement is there, it will pick up immediately, and we are able to maintain the margins. Because of that only, we are adding products in our portfolio, because we have created a brand image here as a quality brand. That's what we have entered into oil now. Soya chunks also launched, which we don't have our in-house manufacturing. We are doing from third party. But soon, once we'll get the pickup, we'll go for the manufacturing setup also in that.
Okay, sir. Okay. And what is the expected revenue contribution and the TAM outlook for the newly launched, it's called Neha Narayan devotional product vertical?
For your information, it is not at launch. It will be launched in January, delayed.
Okay.
So that also will be, that revenue sharing will be next year financial year only, not in January.
Okay, so you mean that it is yet to be launched? Okay. What is the roadmap to ramp up the oil segment, given the very low current utilization of 72 tons versus 7,200 tons?
Out of 700 to 2,000 tons, it's a 10%. 720 tons. By mistake, it was wrong. We mentioned in the presentation. So 720 tons.
Okay.
That is 10%.
How is the market? Yeah, sorry.
That is 10% we have utilized.
Okay. And how has the market response been to the recently launched soya chunks, and what is the differentiation strategy in a competitive category?
No. So in fact, we don't have much competition in general in this groundnut oil. Very less brands are there in the pure groundnut oil. So the initial challenges are only placement challenges, but we are having very good response from the market.
Yeah, but nowadays there are several other brands as well, no? That's why this question was. So competition will definitely arise, no? That's why.
No, there is no competition at all in the groundnut oil segment.
Okay.
See, the pure brand is only subdivided into two brands, they are maintaining the pure oil rather than our all blend only.
Okay, sir. Okay. And what are the top priorities for geographic expansion beyond Andhra Pradesh and Telangana?
Gujarat, Karnataka, and Odisha.
Okay. Gujarat, Karnataka, and apart from these three, any more?
No, as of now, that's only.
Okay, as of now. Okay, sir. Thank you, and that's it from me. And all the very best for your future programs as well.
Thank you.
Yeah, okay.
Thank you. A reminder to all the participants, you may press star and then 1 to ask a question. Our next question comes from the line of Arvind, an investor. Please go ahead.
Hello, am I audible?
Yes, you are audible, Arvind.
Sir, I think yes. Can we expect any capex?
Sorry to interrupt. Arvind, we had lost your audio in between. So if you can please repeat the question.
Am I audible?
So your line is not that clear. Arvind sir, may I request you to repeat your question once again? Arvind sir, we are not getting any audio from your line. As there is no response from the line of the current participant, we'll move on to the next question. Arvind sir, if you are able to hear us, please rejoin the queue for any questions. Our next questions come from the line of Sanju, an investor. Please go ahead.
Am I audible?
Yes, sir, you're audible. Please go ahead.
Could you tell me the current capacity utilization for atta and spices?
Oh,
You didn't get my
yes.
question?
No, we got it. One second. Yeah, for spices, we have an installed capacity of 3,600 tons, and we have utilized 2,637 tons. And when it comes to atta, installed capacity is 14,400 tons, and we have utilized 12,650 tons. When it comes to oil, we have installed capacity of 7,200 tons, and we have utilized 720 tons.
Okay. Any plans of expansion for atta and spices in future, maybe 1 year from now or 2 years from now?
Sure.
Sorry. Within the 2 years, we have to plan, actually. It will take some time, actually, definitely. Within, after the next financial year, we have to go for the expansion plan. Addition
Okay.
of this, yeah.
Atta or spices. Yeah, that's all. Thank you. All the best.
Thank
Thank you. Our next follow-up question comes from the line of Shubhanu from 38 Capital. Please go ahead.
Hello, sir. One more question from my side. H1 around oil segment around 10% utilization. What is your target for full year utilization level?
It is an oil segment.
Yes. Oil segment, what is your target for utilization?
Yeah, I think next financial year, it will about next in the H2 will be utilized almost 30% easily. We can reach up to 30%.
Earlier, okay. Question. For
Yeah, 10% utilization. Now we can utilize up to 30% in this H2.
H2. Earlier you guided around 30 to 40 crore revenue from this. We can expect that?
Yes.
Okay. Okay, sir. Thank you, sir.
Thank you. As there are no further questions from the line of the participants, I'm sorry, we have a last-minute registration coming from the line of Arvind, an investor. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible.
Hello. Arvind, you are audible now.
Sir, at the full capacity utilization of oil plant, what revenue we can expect approx?
Sashima, you have to answer this.
Yes, sir. See, as we have already informed, like by H2, we are going to utilize 30% oil capacity. So the revenue will be obviously better, but exact numbers we cannot tell you.
Okay, thank you. That's all, sir.
Thank you. As there are no further questions from the line of participants, I now hand the conference over to Ms. Ruchika Shah from Equiprojects Advisors Private Limited for the closing comments.
Thank you. And on behalf of Srivari Spices and Foods Limited, I extend our sincere gratitude to all our investors and analysts who joined today's earnings call. Your trust, engagement, and continued support truly strengthen our journey. We remain committed to transparency, performance, and creating long-term value for all our stakeholders. Thank you once again for being an integral part of our growth journey. I hand over to Ms. Sushma and Mr. Narayan.
Yeah. Thank you for participating in today's call, and we appreciate your continued support and interest in Srivari Spices and Foods Limited. The transcript of this call will be uploaded on our website and filed with the exchange within the stipulated timelines. Thank you once again. Have a great day.
Thank you.
Thank you. On behalf of Equiprojects Advisors Private Limited and Srivari Spices and Foods Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.